Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. We saw the bulls roaring back. Yesterday in the second half of the session, we conquered that 24,400 mark once again. Although we ended below that level, but yes, it was a good comeback after being subdued. In the first half of the session. In fact, it was a 300-point recovery on the Nifty from the opening lows, and quite remarkable, so to say. Even the broader end of the markets saw a fair bit of buying at lower levels. But of course, this morning, the GIFT Nifty, although is hinting at a subdued start, but we'll be watching out for whether or not we can continue with the momentum and the festive push that has come in, ahead of a couple of sessions ahead of Muhurat trading session. Will that last or not is something that we'll be watching out for. Of course, lots of earnings to digest. We had Marico reporting numbers today. We have L&T, reporting numbers. Dabur also reporting numbers today. So lots to watch out for on the earnings front. And of course, we also will be focusing on your stock related queries. So if you have any queries, keep them coming in on our live feed on YouTube and we'll try and get them addressed. But of course, before we move any further, let's take a look at the top headlines. Wall Street ends mixed with the Nasdaq rallying ahead of big tech earnings. The Dow closes marginally higher while the S&P 500 closes in the red. Treasury yields meanwhile remain at the highest levels in July. Asian markets trade largely lower following a mixed close on Wall Street. The GIFT Nifty is suggesting a subdued start for the Indian market, but let's see whether we open with a positive bias or not, given the fact that we saw a good comeback in the same session in the session last in the last trading session. Brent stays below $72 a barrel as crude continues to fall. Gold meanwhile hits a fresh record as safe haven buying continues. Margin performance and guidance will be key to track when L&T reports its second quarter numbers today. In fact, Dabur will also be reporting numbers. It could see a mid-single digit decline in revenue and margin contraction may also be there. Tata Power and Biocon will be the other earnings to watch out for. Well, on that note, let's take a look at the cues for trade. Of course, we made a very smart comeback from intraday lows yesterday. 24,300. We managed to shut shop above that level. And what was driving the gains from the word go was the entire banking pack. It was the Nifty Financial Services expiry yesterday. And we saw a fair bit of action both in the PSU banking pack and the Nifty Bank Index as well. Mind you, SBI, that stock gained 5%, kept the Nifty PSU Bank Index buoyant. It gained somewhere around 3.5% or thereabouts. And, the Nifty PSU Bank has gained in excess of 7% in the last two sessions. The Nifty Bank Index as well managed to reclaim that 52,000 mark. It was a 2% uptick. Let's see whether or not, banks emerge as the key driver of any kind of further up move from here or not. Metals also made a very strong comeback, given the fact that there were reports that China is considering more stimulus measures to boost its property market. So on the back of that, we saw metals also coming back into the green after trading in the negative zone for the better part of the session. Autos, but remain under pressure. You had margin miss coming in from Maruti. It was fairly disappointed. They were trying to make sense of Maruti's commentary as well on the festive season and the kind of growth trajectory it expects here on. But, pared some bit of losses, but still among the top Nifty laggards. That was Maruti. Tata Motors, slumped to multi-month lows yesterday. And, aside of that, some of the other movers were the likes of Canara Bank on the back of good numbers and, Adani twins, Adani Enterprises and Adani Ports, reported strong numbers and the stocks were also fairly buoyant. But of course, on that note, let's quickly bring on board our technical expert for today to, decode the setup for today and whether or not we can expect a more up move from here or not. Joining me is Osho Krishan, who is the senior analyst, technical and derivative research at Angel One. Osho, great to connect with you after a long time. But given the recent bout of volatility, we've been trying to make, recovery as well. Yesterday was a good recovery in the second half. Do you think that has the legs to extend into today as well? And 24,500, could that be a possibility ahead of the Muhurat session?
Very good morning, Nandita. Firstly, thank you for having me at the show. Well, now coming at the overall technical setup that we are witnessing from the last three trading sessions, so there has been a strong consolidation for the benchmark index. Approximately 24,200 and 24,100 is the zone which is providing very strong support, and dips are arguing very well for the buyers. we have seen for the 2 consecutive days, the dips of 24, 100, 150 have been seen as a buying opportunity in the market. Yesterday, the rally was driven by the Bank Nifty. Bank Nifty have seen a very tremendous performance, especially by the PSU sectors, followed by some of the private sector banks also. So overall, the market is still not very much clarity in among the trend, but I'm expecting that from here onwards there is a strong consolidation at the lower levels, and a follow-up buying in the coming period can boost the sentiments on the higher end. For Nifty, 24,500 still is a very strong hurdle because major of the put writers have their positions at 24,500. Call writers have their positions at 24,500 only. So that is the resistance for Nifty. The time we surpass the zone, then we can witness another 250 point of rally in Nifty. While for Bank Nifty, I am more bullish on Bank Nifty because of two reasons. One, yesterday it has surged above the 20-day exponential moving average, and historically, if I will be seeing, then this entire year, the 100 exponential moving average has provided very strong support to this counter. So yesterday's pullback has given a kind of a boost to the market, and I'm expecting that from here onwards, Bank Nifty can lead the market. On the higher end, again, 52,500 and 600 is a resistance where we are having a bearish gap. The time we surpass the zone, then we can see strong traction coming in banking space also.
All right. And what about the auto pack? What do you make of the kind of sell-off we've been witnessing in the likes of Tata Motors, Maruti after numbers? Do you see more downside here on?
See, for auto space, after a very long period of time, we are witnessing some kind of strong correction in the auto space overall. So as of now, all the major of the counters are looking very weak because there has been a very steep correction in the heavyweights, like as you have mentioned, Tata Motors and Maruti. So until we witness a consolidation, then it's better to stay sidelines. Although on the technical parameters, majority of the indicators have entered the oversold trajectory, but still one should wait for a decent consolidation or a pullback, then only one should try to enter. It's something like one should not catch the falling knife in these counters. Better to stay sidelines, wait for some kind of correction. Yes, both these counters have seen a decent correction, but looking at the recent development on the technical chart, it's better to stay sidelines. The time we witness some kind of consolidation or a pullback in the near term, then one can look for opportunity to accumulate these counters from short to medium term time frame.
Okay, that's the view. Looking weak on the charts. That's auto stocks for you. But another stock that has been focused today will be Torrent Pharma. Sources are suggesting that promoter Torrent Investments is looking to sell up to 2.9% stake via block deals, and the floor price has been set at 3,022, which is at a fair bit of discount at where it's at right now, 3,125. The base size of the issue will be 2.4% of the total equity, and it will have an upside option of 0.5% or so. The base size of the issue will be 2,500 crore rupees, and upside option of upsize option of 500 crore rupees, and there will be a lock-in of 120 days for further sale of shares. At the current juncture, Torrent Investments holds somewhere around 71.2% stake at the end of second quarter. Looking at the charts of a Torrent Pharma in the pre-open, of course, we can see, it is. It could start with a fair bit of a downtick. Of course, there will be supply pressure as well, in light of the block deal. But in the last 1 month, the counter has shaved off 8% or so, although the returns on a 6-month basis have been fairly handsome, 18 to 20% kind of returns. But given the news flow, would you be looking at this counter in any way?
See, overall, as you have mentioned, this week has been some kind of negative sentiments attached to this counter. So overall, one should try to look for some kind of consolidation, because after a long period of consolidation, we are witnessing a breakdown of the consolidation. So on the technical front, the target which comes on the downside is approximately 3,070, 3,060 odd levels. So if it sustains around these levels, then one should try to accumulate these counters for short to medium term perspective. For now, as the news goes on, there is a volatility in this counter. So better to stay sidelines. The time we witness the target of the breakdown around 3,070, then one could try to accumulate this counter for short to medium term time.
All right, that's the view on Torrent Pharma. But with that, let's see what the markets are, where the markets are at. As we're getting the first ticks, we have opened up, with a negative bias. In fact, it's an almost a 100-point cut coming in on the Nifty. We have, we are trading around that 24,370 mark or thereabouts. Looking at the Sensex, that's also down somewhere around 250 points. The mid-cap index is also under pressure. So as the GIFT Nifty was suggesting, we did open in the red, and the Nifty Bank Index also, after yesterday's stellar run, is seeing some bit of a profit booking. In terms of other sectors, just want to see which are the sectors that are holding out in a weak market. It's the FMCG pack that's managing to hold on. Aside of that, if you look at all the other sectors, they're all trading with cuts. The top laggard being the Nifty Energy pack and the Pharma pack. Pharma is down 1.5%. And I think it's the weakness in Cipla that is dragging the entire Pharma pack down. Yes, Cipla has slipped another 4.5% in trade. Yesterday, remember, it reported good set of numbers, but we did see weakness coming in, and the stock was languishing in the red. Today as well, top Nifty loser, almost a 5% cut coming in on Cipla. Just want to see what brokerages are saying about Cipla. And what is it that's leading to a decline in share prices? Okay, so North America generic sales are likely to decline further in the third quarter. That's what Nomura has said. So there could be some bit of weakness expected in the North America generic sales, which could recover only in the fourth quarter, according to Nomura. Perhaps, the weakness in this end of the business is something that could be weighing in on Cipla. So that's why the stock is the top drag on the index. Aside of that, Dr. Reddy's, Sun Pharma. So top three laggards on the Nifty are from the Pharma pack. Shriram Finance, after the gains it saw yesterday, is under selling pressure. SBI Life, Titan, BPCL, Power Grid, these are some of the other counters that are under pressure. What's doing well and what's emerging as the top Nifty gainer today is Maruti. After a down day yesterday, after 4% cut yesterday, we are seeing some bit of buying emerge. Of course, the management commentary on festive sales has been a little upbeat. Perhaps the street is digesting those comments now. IndusInd Bank, after the drubbing that it has seen post its numbers, managing to hold out in a weak market. Bharat Electronics extending gains from yesterday. Tata Motors also seeing some semblance of normalcy return after the kind of sell-off it saw yesterday. ITC, Coal India and Wipro are among the other movers. Looking at the market open, Osho, we are below 24,400, 100-point cut on the Nifty. Looks like it is going to be a down day unless we stage a good comeback like we made yesterday. But any recommendations that you would make looking at the texture of the market for today?
See, overall, there are two buying recommendations from my side. Both the counters have seen a very decent traction in the last three trading sessions. The first one is ICICI Prudentials. ICICI Prudential has seen a very strong long addition in the last trading session, and also on the technical front, this counter has seen a consolidation breakout. Today, the counter is approximately 1% lower from yesterday's close, but again, it's at a very lucrative levels. 755 to 760 is the zone where one should try to accumulate this counter. 738 should be the stop loss for short-term traders, and 795 to 800 should be the target for ICICI Prudentials. The other counter is from the IT pack. It is a cash counter. Zensar Tech is looking very positive. It has retraced 50% of the recent fall and has also seen a consolidation breakout. So Zensar Tech is looking very positive at current levels. 699, 700 is the current levels where it is hovering around. 730 is the target, and for short-term traders, 675 should be the advisable stop loss.
Okay, those are the recommendations coming in from Osho. But Osho, what do you do with Pharma now? Cipla, Dr. Reddy's and Sun Pharma, top three laggards on the index today.
See, overall, these counters have seen after the result, these counters have started witnessing some kind of cool off or correction, majorly cool off in the Sun Pharma, and there is a continuation of sell off in Cipla. So there is a mixed kind of a bit that one can look for. But for now, overall, the trend is on the sideways to negative. So one should stay focused with a pragmatic approach of sell on the rise for these counters until we see a very decisive reversal in major of the counters. So for now, it already has seen a very strong dip. So better to wait for a kind of a pullback, and that will be seen as an opportunity to sell these counters only for short term, maybe for intraday or for STBT kind of a scenario. But these counters are looking very good for selling, but one need to wait for a decent pullback.
Okay, that's the view. Sell on rise on the likes of Cipla, Sun Pharma, Dr. Reddy's, large cap pharma space. But one stock that's in focus this morning is Voltas. Almost 5% down, opened with a gap down. Numbers came in yesterday, not really enthusing. And of course, Voltas is feeling the chill in trades. PAT and revenue, there was slight miss on expectations. Margins, although, were in line. Margins came in at 6.2% vis-a-vis 3.07. That's what the street was really expecting. In terms of the stock price, in the last 3 months, it has seen good traction. But, I think off late, over the last month or so, it has come under a fair bit of selling pressure. Is the selling mostly done, or would you expect the stock to test lower levels? And in terms of risk reward, how is the stock looking now, Voltas?
See, overall, I will be saying that the selling or the profit booking in this counter have just begun, because we have seen a very tremendous rally from the zone of 850 towards the zone of 1900. And just now the counter have been seen a decent correction of nearly 250, 300 odd points from its peak. So I expect that there can be a scenario of higher profit booking on the technical front. 1560 to 1580 is the target that one can eye for on positional basis. It's not very short term or like intraday, but on positional basis, 1560 should be the target, and where one should try to accumulate this counter. For now, if someone is very much aggressive, then can go short in this counter on a positional basis. And if someone wants to buy, then better to wait for some other correction, some more correction of 60 odd points, and then one can definitely try to accumulate this counter.
All right, that's the view on Voltas. But the other stock that's in focus and that's emerging as a winner in trade is Marico. Profit beat expectations, revenues were in line, and even margins were in line with estimates. Of course, it's largely a rural play, and rural demand has outpaced urban demand, which has been the trend that has emerged across the FMCG universe, if you look at the numbers. But Parachute, coconut oil, and international business, these are some of the segments that led growth, and the volume digit also came in at 5% in mid single digits. International growth came in at 13%. So all in all, numbers are good, and stock is also reacting positively to it. Looking at the kind of reaction we saw from large cap FMCG numbers to earnings, and the kind of numbers that have trickled in from mid cap FMCG names like Marico, how would you really play the FMCG basket now? Even though Dabur is also expected to report numbers today, just want to quickly take you through the expectations there as well. Profit may grow around 17% on a YY basis on low consumer offtake. In revenue likely to see a 4% drop. So, the picture is pretty contrasting, right? Marico reported good set, but from Dabur, the expectations are a little low. So, how would you really play these two counters now vis-a-vis the larger names?
See, overall, these two counters specifically for Marico, I am expecting that there can be a consolidation, a broad range consolidation. 630 on the lower end and 710, 715 on the higher end is a very strong zone for this counter, and it is likely to hover in between until we see a very decisive breakthrough beyond these levels. Then that can only trigger some other leg of a rally in this counter. For now, for Marico, the trend is obviously positive, because from the technical parameters, there has been a reversal from the oversold territory. And after the positive result posting, I expect that there can be a decent traction in this counter, but not very much aggressive for the time being. 710, 715 is the zone, surpassing which one can only see some kind of a strong rally in Marico. For Dabur, again, Dabur is not showcasing any kind of strength as of now. Better to wait in this counter. The 200-day SMA, which is around 570, is a zone above which one can try to accumulate this counter from medium-term perspective. For now, the counter is into a sideways to negative terrain. Better to stay sidelines. If someone already holds a position, then better to hold it with a stop loss of 520, because below 520, again, the technical structure can be seen disruptive. So better to hold with 520 stop loss, or for fresh position, buy above 570.
All right, that's about FMCG names, particularly the likes of Dabur and Marico. But before we move on to our query segment for the day, let's talk about SBI Card. Now, this stock has been in an extended downtrend, right? And numbers also came out nothing enthusing. In fact, Nomura this morning has come out with a report on the stock. They have a reduced call target price. At 625 or thereabouts. Nomura also believes that FY25 is likely to be a washout year for the company. Asset quality woes continue. Credit costs, write-offs, these are also on the rise. And operationally, it was a weak quarter with card additions at multi-quarter lows. How would you really look at this stock now, SBI Card? Do you think much of the selling is behind us, or do you think the lows of 52-week, the 52-week lows will get retested?
See, overall, this counter has a very strong support near the zone of 670, 660 odd level. So it is hovering around the same zone, which has been seen as a very historical, has seen as a very strong support zone. So it is at the same levels. If there will be any kind of further correction, let's say below 660, then this can see a continuation on the downside. But for now, it is at a very strong support. And I expect that from here onwards, there can be some kind of consolidation followed by decent movement on the higher end. But I'm not very much bullish in this counter because the counter is already into a very strong corrective phase. So it's better to stay sidelines. If someone is already having position, then stay stuck in this position with 660 as a stop loss. But it's better to avoid until it surpasses the zone of 800 on the higher end. Then only we can see some kind of trend reversal. So for now, it's better to stay sidelines for this counter. We might see some further correction post 660 odd levels.
Okay, that's the view. Better to stay away from this counter at the current juncture. The stock has been stuck in a downtrend, and if you look at all the long-term charts, you'll see that the stock has given negative returns. Let's shift focus on some of the earnings that are, some of the queries rather, I beg your pardon, that are trickling in this morning. Let's start the query segment with the query on CAMS. This one's coming from Naveen. He wants to know your thoughts on this stock. The stock saw good traction in the last 6 months, but over the last 3 months and, in the last 1 month as well, it has given negative returns and cooled off quite a bit from that 52-week high as well. Would you say that the correction that it has seen presents a good buying opportunity? Do you see a reversal anytime soon on the charts of a CAMS?
See, overall, the momentum in this counter has been fizzled out around the zone of 4600, 4700 is a very strong resistance for this counter. So until we see a very decisive surpassing above 4700, we cannot see a very strong momentum in this counter. But overall, it is maintaining a positive stature on the higher end, staying around the zone of 4200, 4300 odd level. So overall, there can be a further consolidation in this counter. The overall technical structure is still positive, but I'm not very much aggressive from here onwards on the target front until it surpasses the zone of 4700 on a decisive manner. So on the lower end, 4200 is a support and 4700 is the resistance for the target. It is likely to hover in between until we see a very strong breakthrough on either side. The next set of rally is due in this counter.
Okay, that's the view on CAMS. Let's move on to the next query then. This one's coming in from Srivardhan Gupta. Wants to know your thoughts on Reliance Industries post the bonus issue. Any trends that you're noticing now, or do you think it's worth getting into the counter now?
See, overall, this counter is looking very positive on the technical front. It has witnessed a multi-week breakout around the zone of 1300 odd levels after the bonus issue. So I am expecting that here onwards, there can be a bit of consolidation around the zone of 1300, 1320 odd levels. But for longer duration, this is the time where one should try to accumulate this counter. Overall, it has also seen approximately 16% of correction from its peak. So this is an opportunity for an investor to accumulate this counter from long-term perspective. This is it is retesting the breakout zone around 1320 is the zone breakout levels. So one should definitely try to accumulate this counter in a staggered manner. And I expect that in the coming period, it can see a very strong reversal. Immediately 1500, 1540 is the target. But the time we see a surpassing above these levels, then it can move into uncharted territory. And this is a target price from medium term perspective only.
All right, that's the view then. Moving on to the next query very quickly then. Mohit Anand Bhatia wants to know your thoughts on IRB Invid. His purchase price is 57 rupees 57 and it's been 2 years since he bought it. It's been falling from 70 levels that as he's pointed out. He wants to know if it's a hold or exit. He's still making some money here. 62 is where it's at. But what would you advise him to do?
See, overall, the trend is very weak in this counter, but it is in a sloping channel. So it's better to hold this counter with a strict stop loss of 60, 60.50. And on the higher end, if it surpasses the zone of 65, then we can see continuation of the uptrend towards the zone of 69 to 70 odd level. So as of now, better to hold a position with a strict stop loss of 60.50 for immediate target of around 64 followed by 69 and 70.
Okay, that's the view on IRB Invid. Hope that answers your query. Quickly taking up a query on KPIT Tech. This one's coming in from Harish and he wants to know your thoughts on this particular counter. Of course, this counter has been bucking the trend where mid-cap IT stocks are concerned. There was cautious commentary from the management. Numbers weren't all that great and the stock, of course, has reacted to it. In the last 5 sessions itself, it has shaved off somewhere around 10 to 11% or thereabouts. Within the mid-cap IT, KPIT, is it an avoid? Would you say look at better counters like Persistent or a Coforge? Or would you still stick your neck out and say that valuation-wise, KPIT is better compared to others in terms of risk-reward, not valuation?
See, overall, this counter has been performing very well in the recent period. It is just in the last 1 or 1.5 months, the counter has seen some kind of a strong correction. Especially in the last week, there has been a strong correction. But on the technical front, if I have to say, it is hovering at a very strong support of 1300 odd levels. So I'm expecting until it sustains above the zone of 1300, one should not be very much cautious in this counter. These kind of corrections are very positive for a primary uptrend counter. So I'm expecting that from here onwards, there can be a decent gradual up movement in the coming period. In the short run, 1600 should be the target, while on the lower end, it's better to keep a stop loss of 1280 for this counter.
Okay, that's the stop loss 1280. Watch out for that. But the next query is coming in from Satya CK. Wants to know your thoughts on a CMS Info. The stock has corrected a fair bit, in the last 1 month or so, 15% or thereabouts. But on a YTD basis, it's still up 31%. The stock is, has in fact seen a very strong rally, so to say. But overall, in the recent past, it has fizzled out a bit. What would you do with this chart, CMS Info Systems?
See, overall, this counter has seen a very strong correction in the recent period. There has been a strong correction from the zone of approximately 580 and has plunged towards the 200-day SMA on the daily time frame chart. Overall, the primary trend is still positive, but in the recent traction, the counter has given a breakdown from the zone of 520. That means the cycle of higher highs, higher lows has been broken in this counter. So now 520.25 will be a very crucial zone to watch out for. If it moves beyond 525, then only there can be a continuation in the uptrend. While on the lower end, I expect the support lies around the zone of 470. So one should hold this counter with 470 as a stop loss. And if it crosses 525, then one should even try to reaccumulate this counter for higher targets of 600.
Okay, that's the view on CMS Info. Hope that answers your query. I want to take up a query on BLS International. This one's coming in from Ashok. He hasn't really, put across his exact query, but looking at the stock, it hasn't done much in the last 1 month. It has been fairly sideways. Any pattern that's emerging, or or is it going to remain in that sideways zone?
See, overall, this counter on a broader time frame is sustaining on the higher levels. It has been hovering above 200-day SMA, which has been into a primary uptrend. So I expect the recent consolidation in the last 2 weeks can be seen as a positive structure for this counter, and we can expect a higher movement in the coming period. So on the lower end, 320, 330 is a very strong support, while on the higher end, I'm expecting the time it surpasses the zone of 395 to 400, we can see another 100 point of rally, another 70 point of rally in this counter in short to medium term time frame.
Okay, that's the view. Hope that answers your query. The next query is coming in from Alex. Wants to know your thoughts on Skipper for the long term. The stock is, gaining good traction today, coming off a correction over the last 5 sessions. Long term targets, what would you be looking out for? Because the stock is at 527 or so. 52-week high is still some time away, almost 100 rupee away.
See, overall, the trend is very positive in this counter. I expect that this should continue because it is maintaining the cycle of higher highs, higher lows. On the lower end, 480 is a very strong support zone for this counter, while on the higher end, 580 is the very strong resistance. So it is likely to hover in between the range 480 to 580. The time it breaches the zone of 580 on the higher end, then we can see another 100 point of rally in the coming period. So overall, the technical structure is very, very positive, and one should stay invested in this counter from medium term time frame.
Okay, that's the view. Last couple of queries then. I want to take up a query on ONGC. This is coming in from Anunay. He bought ONGC at 120 rupees and he wants to know whether he should wait, average or sell. Your advice?
See, overall, there has been a very strong correction in this counter from the zone of approximately 330 towards 260 odd levels. But looking at the technical chart, it has entered into a strong consolidation zone, which is approximately around the zone of 255 to 280. So it is still in the consolidation zone. I expect that from here onwards, in the coming period, there can be a gradual up move in this counter. So one should stay invested if the time horizon is from medium to long term perspective. For short term, we can see some kind of further cool off or further sideways movement near the zone of 250 odd levels. But from medium term time frame, one should stay invested. The time it surpasses the zone of 280, then again it can move above the zone of 300 in the coming period.
All right, that's the view on ONGC. But last query then, Puneet Rajiv wants your thoughts on Maharashtra Seamless for the long term, more than 3 years. He's been holding the stock at 591, I beg your pardon, since the month of August. The stock is at 613 or so, has been coming off a corrective phase, but over the last 5 sessions, it has seen a decent traction. So Maharashtra Seamless, from a long-term perspective, how would you look at it?
See, overall, this counter have seen a kind of a reversal in the month of August, and again after 3 consecutive weeks, the counter has again entered into a consolidation or correction phase, we can say. But overall, it is expected that current levels around the zone of 560, 550, these levels should be providing very strong support to this counter, and at current levels, there can some kind of traction coming in this counter for a higher target of 670. So not very much bullish on the target as of now. 670 on the higher end and approximately 560 on the lower end is the immediate range for the counter. If it surpasses above the resistance levels, then only we can see further movement in this counter from medium term time frame.
All right, that's the view on Maharashtra Seamless. But with that, we've come to the end of the query segment. Osho would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Here's wishing you a very happy Diwali from me and the entire team of Money Control. Wish you a very profitable year ahead.
Thank you so much, and I wish you the same. Thank you.
Well, thank you. On that note, markets, still there where we left it. 24,397. It's an 80-point cut on the Nifty as we speak, but the mid-cap index has managed to edge back into the green. But on that note, let's bring on board a fundamental guest for today. Joining me is Deven Choksey, who's the MD of DRChoksey FinServ. Mr. Choksey, great to have you on the show. Before I move on to stocks and sectors, I want to quickly ask you about what you're making of the correction that we are witnessing in the market. It's a good 8 to 9% kind of correction from highs. Do you think now, we've seen a decent amount of correction? Is it a good buying opportunity, or would you say that there could be some more downside and it's not really the time to go all in?
Well, I think the market is offering significantly good amount of opportunities in the corrected phase. The price correction has been sharp. The uh, the time correction is yet to happen. I think in the corrected prices, definitely you get some amount of opportunity at lower levels, and those opportunities definitely can be probably bought into. That's how I think we look at it, because overall fundamentals of the economy and the fundamentals of the corporate sectors, they remain same. Most of the analysts would probably say that I think the quarter two earnings are not up to the level at which I think they were expecting it to be. But forgetting that the this time around quarter two earning also had a delayed kind of an implementation of the government priorities, largely because the budget shifted into the month of July, election happened till June. So all in all put together, I think this particular phase had to be remembered while looking at the quarter two earnings. In my viewpoint, the third quarter and the fourth quarter remains pretty decent as far as the prospects are concerned. And we believe that I think the fundamentals of the economy and the corporate sector both are in place. So certainly, I think the corrected prices would be the better opportunity to buy into. And those the people who have seen the moment of last 2 years, they may not be able to see this momentum. I think in next 2 years, I think they will be see the accumulation called gradual buying happening in the market. But that's the best time for the investors to buy into this market. So we would think that I think the coming 2 year period is a better period for investors to accumulate some good quality stocks in their portfolio.
All right. You alluded to the second quarter earnings season. Thus far, within the banking space, we've seen quite a bit of divergence, right? But we've seen a very good rally play out both on the Nifty Bank Index and Nifty PSU Bank Index. Stock like SBI rallying 5% yesterday. Thus far we've seen that banks with a fair bit of exposure to MFIs, have witnessed pain in their second quarter earnings, and Street has punished them as well. So here on within the banking space, would you stick to the quality names, names like ICICI, HDFC Bank, which have started, started performing quite well, stock price wise? HDFC Bank, case in point. What would you really look at, given the fact that even PSU banks are rallying? Would you look at private banks given the kind of valuation comfort they have, or would you say PSU banks also offer valuation comfort, and one should be stock specific rather than looking at a PSU or a private?
So let me put it in perspective that in a banking space, the larger the size of the balance sheet, better is your ability to lend. And better is your ability to lend means that I think you can lend higher sum at the same time competitive cost. So to a greater extent, I think this particular combination, if you want to see it, this will be available in some of the large size corporate banks which are already listed in the market, be it likes of HDFC or ICICI or Axis for that matter, or Kotak. I think these kind of banks, they remain a compelling proposition from the point of view of looking at the long-term prospects of next 10 years, because their book size itself, I think, is suggesting that their growth is going to be sustaining over a period of time as well. The other side of the activity is NBFCs. Some of the larger NBFCs who are retail focused NBFCs in particular, likes of Bajaj Finance, or even housing finance focused activities in case of Bajaj Housing Finance, we believe that I think there again I think the size is important and they are playing with the size. Bajaj Finance, for example, I think is 3 lakh crore plus AUM. Bajaj Housing Finance is about 1 lakh crore plus AUM. So obviously, I think we are looking at size as a first condition to buy into some of the larger names, some of the quality names. At the same time, I think the ability to invest money in building the infrastructure is equally going to be playing a very, very meaningful role in coming period, largely because of the fact that the fintech infrastructure on which the entire activity has to be riding now is a precondition for any banking company to survive with grace. And that is where probably I think we would think that the players who have the ability to spend money on the infrastructure, particularly the digital infrastructure or fintech infrastructure, I think they are the ones I think who would have bigger advantage. So keep this particular aspect in mind while selecting your company from investment perspective.
Uh, Talking also about the MFI stress, we saw companies like Credit Access, Pandana Spurti, these were some of the stocks that have, been badgered, so to say. When do you really expect the MFI stress to peak out? Do you expect third quarter to remain as bad, and or FY25, the second half of FY25 to remain under stress as well?
I'm not a very big fan of MFI space per se, largely because of the inherent deficiency that in this particular model is at the root cause of the problem as far as I think the recovery of money is concerned. On one side, I think we say that money has to be lent to the privileged class of people or the people who are basically, I think, underprivileged segment. And to them, I think this money has to be made available. On the other side, I think we are charging them an exorbitantly high rate of interest. In turn, the institution is taking larger risk into the portfolio in form of, I think, the non-performing assets. So I think this is a typical state where probably the companies are going to have the challenging times every 2 years, 3 years in their books. And that's where I think we don't like this particular space, I think, from the investment point of view. So, in my viewpoint, I think though at times I think the smaller financial institutions, MFIs, as you call them as, they are becoming the attractive proposition for some. For us, I think the larger players in the finance space, I think they are the better opportunity from the investment perspective.
Point taken, Mr. Choksey. Last question, really, and this is about the OMC pack. The entire pack is under pressure today. There is news flow around, OMCs. In fact, sources suggest that OMCs have high dealer commissions to petrol pumps and will undertake intra-state rate rationalization as well. In fact, they've been asked to keep intra-state price variations within 2 rupees per litre. How are you reading into this, and what's the overall view on OMCs given the fact that earnings haven't been all that enthusing and stocks have also corrected a fair bit from highs? So, would you look at these from a valuation standpoint now, or would you say that there could be some more pressure on earnings going forward? So, wait it out.
So, what we follow in our organization as a process, any business, I think, where the government interference is high, I think is a business I think which is best left behind as far as I think their investment is concerned by the investors. Because I think this is one sector where every second week, third week, I think government would play around with their policies and the regulations. Maybe they have a business to do that. So I think we don't get into that part. But as far as we as an investors are concerned, we can't take a long-term bet on these kind of businesses. On some day, I think you will bring the windfall tax. On some day, you are tinkering around with the excise duties. On some day, you are bringing the newer rates for blended fuel. On some day, I think you are managing the distribution commissions, etc. Now, if these are all so many policy-driven decisions which government keeps on taking, and that too, I think having taken that decision, they keep on changing that decision every now and then. As an investor, I think you can't plan your long-term portfolio when the government changes the decision every now and then. So from that perspective, it is safer not to touch them in your portfolio, even if they are valuation-wise attractive. They will only work good in the bull market when they probably do not find enough ideas. So they will probably chase some of the weaker ideas. But the companies may not be weak. Let me qualify that statement once again. The businesses of PSU companies or the OMC companies is not weak, but the fact that I think every now and then the changes in the policy making is definitely affecting the investor. That is the point I think which remains to be on record. So from that perspective, we believe that I think it is better not to get into the investment business of OMCs and stay out of it. Rather, I think focus on some other areas where you are pretty sure about the business and their outlook going forward.
All right. Last question, really. Any stocks that you'd be keeping on your radar? When on Muhurat trading day, any top Sambat picks from you?
We have been liking stocks, and I think we have released the list of stocks which we like. We've been liking. That includes the names like Tata Technology, Bajaj Housing Finance, Bajaj Finance, kind of companies. I think which we have been finding ourselves comfortable investing in. So any corrected price, I think, is a good opportunity to buy these stocks into the portfolio, and that too for long term.
All right. That's a Muhurat pick coming in from Mr. Choksey. Mr. Choksey, on that note, would like to thank you for taking out time and joining in. And here's wishing you and your team a very happy Diwali from the entire team of Money Control.
Thank you so much, and wish you all very happy Diwali and prosperous new Samvat year 2081.
Thank you. Thanks a lot. Well, on that note, of course, looking at the market, Still in the red, below 24,400. Mid cap index holding out as of now. And but the encouraging bit is the breadth is strongly in favor of gainers. Almost 4:1. That's the kind of NSE advance decline ratio I can see on the screens. 1,800 advances to 490 declines. So not looking very bad when it comes to the broader end of the markets. On the index level, of course, some bit of pressure, 24,400, round about that figure, but below that level as of now. But with that, we are completely timed out on this edition of Opening Bell. Thanks a lot for taking out time and joining in and watching our show. But of course, stay tuned to Money Control for all your news and updates, and I'll see you soon.